Let's say you have a pot of money and you're thinking where is best to invest that money. And considering that you don't have to do any work pretty much. So of course you can invest it in a business, right? But if you invest it in a business, you got to work, right? You cannot possibly not work, especially the first couple of years. You've got to work whatever you're trying to build, right? If you invest in real estate, again, there is some work involved, although a lot of it's passive, but there is some work involved and you need a lot of capital in order to get into real estate. Financial assets, again, there is some work that's required in order for you to know what you're doing in terms of investing, right? You've got to learn, you've got to know what stocks to invest, to carry out your fundamental analysis, technical analysis, sentiment, and also so on, PE ratios, profit and loss, EBITDA, right? There's a lot that you need to learn in order to invest in these things. There is one thing that you can invest in that practically don't require you to do any work, and it will make you on average somewhere between 10 to 15% per year over the long run. Okay, over the long term we're talking about. And that is an index fund. I would probably recommend the S&P 500 index fund over the FTSE 100 fund. An index fund is basically, the S&P 500, for example, is basically a fund that tracks the top 500 companies in America. The worst place you can keep your money, in my opinion, is a bank. Right, at this moment in time, right? Let's just say as a current account, a normal account, right? It pays you less than 1% interest rate over the year at the moment in time. Whereas banks are going to use that money of yours in order to make themselves a hell of a lot more by trading the financial markets as well as investing in real estate. That is what they're doing with our money, while your money in the bank is making you less than 1% a year. Doesn't make sense, right? If you can make on average 10% a year from an index fund, that's a really good return investment. Now, just bear in mind though, it doesn't mean you're going to make 10%, 12%, 15% every single year, right? It's just over the long term of things, right? Sometimes you might even make a 5% loss during a particular year. But if you're happy to hold that money for 3 years, 5 years, or 10 years over the long term, on average, each year is going to make you between 10 to 15%. And in fact, the S&P 500 over the last 2 years have beaten 20% a year, right? You can sign up for an index fund with a company such as Hargreaves Lansdown or Vanguard, right? Or in the UK, Fundsmith, right? I've worked with all three of them. At this moment in time, the one I'm with happens to be Vanguard, but they're all good. You just need to find a reliable one. I happen to work with Vanguard. You can work with Vanguard if you want. So you just go onto Vanguard website, type in index fund or do a search, and the S&P 500 index fund will come up. You then just make a bank transfer from your bank money into that index fund, and then it starts to track the S&P 500. And as the S&P 500 goes up, you're going to make profit. As it goes down, you're going to make a loss. In the long term, you are going to make around 10% per year return investment, which is a hell of a lot better than any bank.